What's going on, guys? All right, it's February 25th, 2021. I'm going to be doing a little bit of a shorter watch list today, just because I do have to record some video lessons for my mentees. So we're going to be going over the meme stocks today: GME, KOS, AMC, BB, Express, and Naked. Um, as you know, these things have been going crazy. A little tough to play right now, and I would be very, very careful. If you're going to play these, then you need to use very, very, very cautious position sizing. And in my opinion, the only viable option on the two stocks like GME and KOSS would be the panic dip buy strategy. If these things can drop 300, 200%, 100% off their highs, that could offer a decent risk reward entry for it to have a nice little bounce into with volume. But with that being said, that is still extremely risky because these things are so volatile. I wouldn't be buying up here on any of these because, as you can see now, they are starting to come down. And they could go up more. I mean, they could go up 200, 300%. But the risk reward just isn't there if you're risking a 50% drop for a 100% increase. It just doesn't make sense. So you have to be very, very careful here. Also, you have to be aware of the potential of an offering. These stocks are going up again on this insane run. They could potentially run more. And there is that chance that the company will decide to do an offering to, liquidate on some of this, insane price action. And I would be very surprised if they didn't. I mean, they need money. Why would you not want to sell into this big run up? So always be careful of the offerings that are overhead. I would be short selling any of these if you're a short seller. I mean, if you're a short seller, you understand if this thing goes up 300%, 400% against you, you now owe that to your broker. So it can really open yourself up to some pretty big losses. The other thing to keep in mind too is the best plays for these were back here when they started breaking out their consolidation period. And KOS, GME, when these open up today with all the volume that I'm assuming will probably come in, you also have to be careful of the halts. If you remember last time, these things halted up 100, 200, 300%. Then they would also halt down 50%, 60%, 70%. So the risk was really astronomical. So you really have to use kind of like lottery style sizing if you want to play up here, because that's what you're basically doing. You're gambling. And with that being said, I mean, if you're gambling, you can gamble and make a ton of money, but you can also lose a lot of money. So you need to go in with that mindset of, I could lose up to 100% of my investment here if I'm buying these tops. If you wait for a massive panic, you're giving yourself a little bit more of a chance of survival here as far as your risk reward. Because if something does drop massively off its highs, there is a great chance it could bounce. The other strategy that you could use is to look at the laggers in the sector. So if you notice, you have AMC, you have BB, you have Express, you have NAKD. These ones had nice runs into the close yesterday, obviously with the other meme stocks with COS and GME, but they're kind of lagging right now. They're not having these crazy moves pre-market. They didn't really have as massive of a run in the after hours as COS or GME. So that being said, when GME and KOSS kind of start to halt, during the trading day, or if they do an offering and people stop trying to buy these, they're going to need a place to go. That volume is going to need to find a home, and the odds are they're going to look at these other ones that aren't as high priced or haven't moved as much and start throwing volume into those stocks. So NAKD, EXPR, BB, AMC, those are going to be kind of the stocks that volume would most likely go into. So you could start sizing them very small into these other stocks that are within that same meme sector, risking one of these support levels. And then that way, if the volume runs out here, if they start getting halted, if they can't trade them, whatever might happen today, that volume would most likely come into these stocks over here, and that would cause them to have a massive run as well. With that being said, it's very risky and highly, highly speculative. There's no guarantee that would happen. So you just have to keep that in mind if you're going to make plays on those stocks. So just keep that in mind, stay safe. I'm really hoping that all this momentum and all this volume will come over to the OTC land and that we can get some more OTC runs. They've been kind of slow the last couple of days. 2 days ago, they had really nice panics that I was able to buy into. But yesterday was really, really slow. A lot of breakouts got stuffed. The panics weren't really panicking. It was just a slow decline on a lot of the OTCs I was watching. And when there's no volume and there's no volatility in the OTC world, it's just, you can't really play them. So I'm hoping all of this momentum will, bring some of those buyers back to the OTC land, and try to get those hot again, because as soon as these die out, people are going to want to find a new avenue to try and make those big gains at, and OTC land is known for that. So I hope this is helpful. I'm sorry I had to be so quick. I do have to record some video lessons for my mentee students, which if you want to be a part of my mentorship program, make sure you sign up. I'll post a link below. People have been getting a lot of value out of it, and I think you could as well. So thank you guys. Have a great day and good luck.